Nvidia has been driving the stock market for more than a year. The chip maker has grown into one of the most important companies in the world because other companies are using its chips for artificial intelligence. However, doubts about Nvidia's ability to keep growing at this phenomenal pace have hurt its stock of late and has rippled through the entire stock market. So what will an Nvidia slowdown mean for the AI-powered stock market? To show Nvidia's importance to the entire market, let's take a look at a couple of charts. This first chart shows that Nvidia accounted for nearly 3% of the S&P 500's entire profit in 12 months. That's a gigantic amount for just one component out of 500. But Nvidia's share of the profits in the S&P 500 is nowhere near the size of its market capitalization. Nvidia accounted for more than 20% of the market cap gains for the entire S&P 500. So why is Nvidia so massively important? Well, take a look at this chart of revenue, which shows huge spikes starting in early 2023. Why? Well, if you'll remember, ChatGPT was introduced right at the end of 2022 and became a huge phenomenon. And that's when all of the other big tech companies started rushing to Nvidia to buy gear to develop their own generative AI solutions. Nvidia's extraordinary revenue growth solidified that generative AI was going to make a lot of money for technology. And so far, it has made a lot of money for Nvidia. But now, as we're more than a year out from the initial explosion, that revenue growth is starting to not look as strong. In its most recent quarter, Nvidia reported revenue growth of 122%, which is still phenomenal. A company this old making this much money doubling its revenue is still insane. But that is down from revenue more than tripling year over year in the 3 previous quarters. And Nvidia's growth is expected to keep slowing. Executives in the most recent quarter said that they would make $32.5 billion in revenue in the current period, and analysts expect about $36 billion or so in the fiscal fourth quarter. Now that would still be sequential growth, but if you look at the growth percentage, it is declining. In the fiscal third quarter by Nvidia executives' forecast, growth would be around 80%, and in the fiscal fourth quarter based on analyst forecasts, it'd be about 65%. So this is a major slowdown for Nvidia's revenue growth coming up. And as the very nexus of the stock market right now, that could mean trouble. What needs to happen is the other companies that are buying Nvidia gear start showing a return on that investment, which will keep them coming back for more and actually create this cycle of huge investment that would justify the AI gains in the stock market. But we haven't seen that happen yet. So that's what to watch for as we move forward.